Traders everywhere, we are back with another live show with TradeStation. And with me, as always, is David Russell, their global head of market strategy. And as I always say, one of the best things about having David here on the show, especially if you're on the TradingView platform, is that he is writing research and charts and posting this research to the TradeStation account on TradingView, which you can read, you can interact with, and then you get him live on this show. So you can really combine the research aspect, the written research, with this live show. And before I go any deeper, I just want to remind you all, this show is sponsored by TradeStation. TradeStation pursues a singular vision to offer the ultimate online trading platform and services for self-directed traders and investors across the equities, equity index options, futures, and futures options markets. Equities, equity options, and commodity futures products and services are offered by TradeStation Securities, Inc., a member of NYSE, FINRA, CME, and SIPC. Now, we have some great topics to get into with all of you about markets and what's been moving, especially with all the volatility lately. But before we get to that point, I'm going to go ahead and hand the mic off to David Russell so that he can give you all some basic details about what, some readouts on his end, such as this screen here, and also really kick off the show here with the insights and the charts that matter.
Oh, it's great to talk to you, Steph. Well, I'm going to start off by showing you guys some standardized returns of some ETFs. My PowerPoint somehow was not working quite right, so I'm going to show you some disclosures in a second as well. We might talk about some of these ETFs. In fact, we definitely will. So I wanted to show you the standardized returns. Here is also just some quick disclosures I'll share with you. The present mode wasn't working the way it's supposed to. So yeah, it's very interesting here. We've had the market up very clear kind of string of days. And to me, the biggest thing that really stood out was there is a sentiment report from the American Association of Individual Investors. And basically it had been negative for, I think, 12 straight weeks. And it went, it was over 50% negative for at least 12 straight weeks. And now it went under, for the first time since sometime in February or something. But the key thing is that we have seen an extreme kind of negativity out there that, even though we've been bouncing for a while here, in some ways, some people are only now just starting to kind of, turn to. So I think it's important to realize here is that in that kind of environment, when the sentiment drops from being super negative down to being positive, it tends to create an overall sort of environment where people can remain positive for a long time, or at least it doesn't go shooting back to negative right away. It often will have a period of kind of stability, and I think that's really the key thing. So let me bring up my charts here. And so basically this is the S&P 500 now. So to me right here, the first thing we have to realize is that we're kind of right now in a drift. There's really no news until after Memorial Day. In my view, the next scheduled news event is the 28th of May, when we have earnings from NVIDIA and we have Fed minutes. So Fed minutes at 2 o'clock in the afternoon on Wednesday. That's like 13 days from now. So we have all of next week drifting in the Memorial Day with nothing scheduled. And so I think it's important here to realize is that this sort of environment could result in the market kind of drifting and making small moves and individual names kind of breaking out and running. And you might see some stuff like that. So what's interesting to me is we have this shaded area here. This was the area in late February and early March where the market kind of tried to hold and failed before we really entered the downtrend. And so now we're kind of sitting in that. And so from my view here, we might just see the S&P kind of meander in here, through Memorial Day. And so just that is my overall sort of outlook. I think when we look at the things that are out there now, to me, what's also really important is that I actually was very concerned about yields. And you guys know I look at the 10-year Treasury yield a lot. And what's interesting to me is I had been kind of looking for a potential push up into this range, and I was really looking for something between 460 and 465 based on some of the daily action here. But in some ways, you could also, you can see here that there is the potential if you make this a weekly chart. I actually drew it. It goes kind of to right around this sort of range, this close back here in that week at the end of January. So basically, this could be the range, a little bit bigger. And so this is a 10-year treasury yield. So if we look at this now back on the daily, today we have a bearish outside day on TNX. That's a potential reversal pattern. It's happening also, I mean, I don't want to draw too many lines, too many things here, but it's possible, in my view, that we might have just seen the high for the 10-year. And if that's the case, that could have implications for various things in the market. So why do I say that? Well, first of all, today we had Jerome Powell, and he was kind of hawkish. We tried to hit a new high, and we failed. We had PPI that was one of the strangest PPI reports I've ever seen, because it looked like you had retailers eating margin, basically absorbing tariff costs, and that resulted in a strange part of the wholesale prices actually dropping, but it's very strange. But the key thing is that this week's CPI was relatively low, and now we're starting to see Walmart said that they might have to start raising prices soon because of tariffs. But in many ways, this is what we've known for a while. So again, you sell the rumor and you buy the news, and in many ways, by the time the tariffs trickle through and push up inflation, the market very well may have moved on completely, and it's just ignored because we know that that's the old story. And I think right now we are in that spot where we do have a sort of thing here where we have shifted from this traumatic sort of event that happened in February through early April, and now we're simply in a different period, and we're in an environment now where we're getting IPOs and they're performing well. We got M&A with today. We saw Foot Locker getting acquired by Dick's. So we're in a spot here where the news flow could be better. We're having Trump talk about there might be a deal with Iran that could potentially push down oil prices. So all of these things do create an environment here where I think the trauma that we had of the tariffs and stuff, the pendulum seems to be swinging the other way now. And I think that that's simply what the environment that we could be in right now. And with this kind of benign drift here, potentially going into Memorial Day, that could be our environment of relatively low volatility, but a lack of selling pressure, and then individual names and individual stories kind of popping up.
Well, David, this is why we like having you on the show and doing this live show about markets with yourself and TradeStation, is that you give us sort of this forward-looking, view into markets. That's a reoccurring theme of this show, and I've heard that that's rather helpful to people because of the time, you can the time you can spend looking at past data. But it's all about what's coming up. And this element that there's sort of a potential low news cycle, low economic news coming up is really interesting, especially with the chart you have up, because it almost fits in perfectly. And we were just speaking about this before we went live, where maybe there might be a little bit of a boring moment for markets since that, really volatile crash, then quick rise. Perhaps we're reaching that moment. And I just think that's so interesting, especially with the chart you have open. So do you feel like after such a dip, then such a rise up, that maybe it's a good thing even for the market to sort of take a breather?
Mm-hmm. Yeah, this is what you'd kind of would expect, and what you often see when you see a very strong sort of momentum thrust like this. And if you go back to late 2023, we saw things like this. You get a period of tightness and of sitting and calming, but you don't get much of a pullback, and then you get continuation. So despite all the things people are saying, this market could be an environment when actually, new highs could actually be in the cards. And the reason I would say that is because it's what nobody wants to hear. Nobody wants to think. Everyone wants to think they're going to be able to buy it again under 5,000. And as a result, they will be kicking and screaming as it potentially, as the bad news doesn't happen. And instead of getting more tariff news, maybe we get less, maybe we get M&A, we get things like we've seen this week with announcements of AI deals in the Middle East. So, these sort of things I think actually show now that this is kind of turning. So yeah, in my view here, a period of calm and digestion. I don't have any moving averages on this chart, but we could add something, for example, I think I have the 8-day here hidden, the 8-day exponential. People might be looking for the 8-day exponential to catch up. In my view, sometimes you want to just see the 8-day kind of do something like this. You want it to kind of, go up there, pause and stall and sit, and then maybe we go down and test that high from late March, which was right around 57.83 or something, around 50, right, kind of under 5,800. So maybe that's what we do. We sit, we stall, we drift through Memorial Day. The 8-day comes up, we touch it, it starts to fall, and then we have a few days panic down, and then a flood of money comes off the sidelines and is a buyer. So I mean, that's, I think, kind of the paradigm to work with. It could be a couple of weeks before that happens. So we could simply be in a spot until then when individual stocks start to kind of do things. And so some of the things I've been doing is I'm scanning for stocks hitting 52-week highs that are pulling back and hitting the 8-day exponential. I'll just say, for example, I mean, it's not necessarily anything right now, but Palantir was an example of that. Went up to a high, went down under the 8-day, kind of held, and then continued. And I'm looking for names like this, patterns like this that are out there. I'm looking for names that reported earnings in the last few weeks. And this is sort of example. I mean, this one went under the 8-day exponential, but it did hold it, which was a signal right here. And I'm looking for patterns like this to give kind of 3 to 5 day moves.
Well, on that note, I have to say too, in terms of this chart that you're showing of Palantir, what I think is also pretty interesting is the element that you were saying about people wanting the S&P 500 to go back down to those lows, and maybe they miss the move. And that is something when I even look at a chart like this, where I mean, just the speed of the recovery does make you think that essentially, if how quickly you could miss these moves, and that in turn could possibly be sort of a slingshot for higher action, because FOMO can be pretty powerful in markets. You don't want to miss out on anything going that much higher, and especially if you look back at it and you think, oh my gosh, a month ago this was trading down here, now it's up here. And so, I haven't considered that approach, how quickly things can turn. But so now you got CrowdStrike go up as well. Do you have some names in mind that you've been watching or writing about or researching?
Well, CrowdStrike is one I think right now is on a potential breakout watch. And from my view here, just to see how it behaves in the next few days. But this is one, with earnings, coming up. It's a very similar chart to Palantir, and this one has been on my list. Now, another one that has broken out that I'm waiting for a pullback, maybe one more day down, maybe a test of this of the 8-day is Uber. Now, Uber is one of these stocks that if you look when the market crashed, it really didn't make significant lows at all. And this thing has been moving sideways here on the weekly chart, really, for about the last 2 years, and we're just now getting a breakout on the weekly. This to me is a very significant sort of thing. And from my perspective, this is a name now that people might want to be looking at with a very kind of very tight sort of pullback here. And from my perspective, weakness tomorrow morning in a name like this could see some buyers step in, and it could potentially see that kind of continuation. So might potentially hit the 8-day, or it might not even get down to it. But this is an interesting example of a sort of breakout. Another one that I'm actually watching, it's not an actively traded name, but is SAP. This is a very sort of interesting, this is a big software company over in Europe, but it's interesting to look at how this rallied to new highs, pulled back, and some of these are not even getting down to the 21-day exponential, but it pulled down, kind of tested and held the 8-day, and here it is. You can see how we basically had you can kind of just decide where you want to put it, but I mean, it has broken out and essentially held along those old highs there. So this is an example. Another name I'm watching, I'm just looking at what I've been seeing recently, but Intuit, this name INTU is basically in this long sort of sideways pattern, also had very shallow pullback relative to the overall market here. And this, in my view, these are going to be some of the areas where people are starting to kind of look into like newer, different areas. And I think this is what we very well could kind of see in the coming sort of weeks, especially with names like software. These are some of the areas that have been kind of performing, and I'm looking for stocks that have been kind of dead for a while that are starting to show patterns of short-term momentum that might have that potential for more significant kind of breakouts. We're like, it hasn't gone anywhere for like over a year, which means that if it does break out, it might extend and give us a run that could last for several months. That's kind of what I'm thinking. Another name, and I'm not really sure what's going on, but I don't know if you looked at Groupon recently, but this has been just a very explosive stock. Had some earnings news, and I don't really understand why. There's something interesting happening in this name, but a name like this is broken out so violently, GRPN. And so this is another one I'm looking at. Names like this, in my view, 2 to 3 days, 1 to 2 to 3 days of weakness, and then people might step in. So this is a very interesting sort of breakout. Another one I've been watching is this South Korean software e-commerce company, CPNG Coupang, also basically breaking out here after a long period of consolidation. A lot of these are names that have the potential just for some extension, things that are relatively new. And that seems to be what's kind of working here in different ways. You can have a sort of thing where if we're really entering a new kind of phase of the market, and in my opinion, go back to the S&P here on the daily. This bull cycle started in, well, I should say the previous bull cycle. It started in October, November of 2023. And, in my view, this cycle, it maybe had to end no matter what. Maybe it wouldn't have been tariffs. Maybe it would have simply been a period of sideways movement or something else. But the key thing is that we're now in something of a different market. So there are going to be some other sort of areas. And one of those things that has been working as well has been financials recently. But in my view now, we're in a spot where we might start to see just other sort of names that are kind of stepping in. And it's early enough now that those names, like maybe it is something like Uber, it is to a certain extent probably Palantir, but names like that are not the mega caps, but people say maybe it could be a mega cap, or maybe it's just in the beginning of a longer term growth phase. Those are the sort of areas right now where people might actually be kind of saying what is going to be a major name 3 to 5 quarters from now. And so that's kind of what I'm looking at. And it's a little bit of a sort of unusual sort of environment, but it seems that the market is giving us. By the way, I do, if you want to talk about anything else, I need to go back and just briefly mention the dollar, but we'll do that next.
What I want to bring up is the element of some of these names that you're showing, especially even showing Groupon. What particularly caught my attention is you do wonder if this bull market is back and these moves do start up again. Does that really expand the playing field for all of these companies that maybe were once dead or left behind or totally forgotten about? And on our last show, we spoke about breadth and the market participation, and I keep going back and forth between the the S&P 500 chart that you were showing and sort of this not a huge news cycle coming, but then I also go back to the aspect of there's just so many companies that have just been you probably remember the 2022 market to 2023. There are like 500 companies that are still trading just at the bottom of the barrel since that bull run. And you wonder, like, hey, maybe if this, now that I'm watching you show these charts, like maybe if this bull market is actually back, like there could be some some movement once again, not just the magnificent seven, but a wider participation and just so much conversations about breadth. I would encourage our viewers to go watch our show from last month, because there were some great educational concepts from David explained about that particular topic and why it matters. And I just wanted to add that context to this part of the chat. And yeah, exactly. That S&P 500 chart, that is just burned in my mind right now. I can't tell, like those high, I have to say those all-time highs though look very daunting to me. Like seeing the S&P 500 get back to those all-time highs, that just feels very heavy, but I could be wrong. I'm, curious to hear what your thoughts are on that aspect that I'm mentioning about breadth and then just still the journey to new highs.
Well, that's the problem, I think, is that you come down to the big names, which is part of the issue. So this is the advanced decline line. It's pretty amazing. The advanced decline line has been hitting new highs recently. Wow. So yeah, I mean, I want to just briefly mention that to me the dollar index, I just had to mention before forget, but the key thing is that it's held the bottom of this range, and from my view here, if we see yields move lower, the dollar move higher, it's a reversal of what we saw in March and April. So I want to just kind of mention that that's giving some confirmation as well to just show that there's a certain amount of America is back, or the sell America trade and the end of the world Armageddon sort of trade is kind of fading. So that's the dollar index, and the key thing was to me was that it went down, held this level, and to see the dollar index move higher, and if we are seeing a peak in yields here, like I mentioned on the daily chart, if we're seeing those two things together, that gives us the intra-market signal, combined with this incredibly high negativity on the AAII and this huge amount of negativity that we've seen. You put all those things together, there can be a return to the traditional kind of American, traditional just US stock market and the kind of sell everything mentality. I'm putting these things together and it seems to be kind of fading. So that to me is important. But we might not be selling everything, but we might be selling certain stocks. And I think that's part of the issue here. So what's interesting to me is that you talk about the mega caps, and here's Apple. And I think Apple here, to me, the two that are kind of most at risk are Apple and to a certain extent Tesla. So I think we have now, I don't know what this is. I think actually we have here an Apple. This is actually a position. So I'll get to you in a minute. This is a paper trading position that I have in Apple. But the thing about Apple here I'm seeing is that we basically have this old sort of range across here. And, Apple here is well below a lot of other moving averages. Like, for example, it's under the 200-day. There's been all kinds of issues with Apple. So I think what we very well could see is the S&P doesn't go to new highs because stocks like Apple don't go to new highs. Stocks like Tesla don't go to new highs. Potentially stocks like Alphabet do not go to new highs. And that, I think, is part of the sort of dynamic we might be in here of some of these big names. And it's, trying to really figure out time with Amazon, but that's another one also that, may or may not be stuck for a while. So I think the thing is a lot of the mega caps, they might be kind of sitting and stuck for a while, and that will keep the S&P from just going to new highs right away. But meanwhile, individual names are performing, and I think that's kind of what I've been trying to kind of look for here. So right now with Apple, it's interesting because we're now in a spot where people who potentially say, all right, the market's going to top out here and maybe it's just going to sit and drift. And when there is going to be a period, say we do get a pullback at some point, if Apple remains stuck under 215, people might actually look for it to have some, kind of movement to the downside. So it might be time to start thinking here kind of about Apple. So you can see this. This is actually a synthetic or a virtual position. It's not a real position, but I basically have 500 shares of Apple that I purchased around 205. I think I was doing a demonstration to some customers, so I purchased it. So, but I want to just show you here that this is in my TradeStation account. You can see I have these positions. Now, this is my demonstration account. This is not real money or anything. But I have these different positions here. Now, what's interesting is that it's now possible to trade options without a per contract fee if you use TradeStation's API connection with TradingView. So, we love options. And one of the great things is that we now have this ability to be trading options right there in the actual TradingView platform. So, for example, I can go up here to Apple and I can go to AAPL and I can go to options, and it will then bring up the options chain on Apple. So from my perspective here, people might be, at this moment in time, if we go back very quickly to the actual chart, you can see that like Apple might sit for a week or two. But if people are looking for a break lower, they might want to. So say, for example, we thought that was going to happen in the next few days. And it might not, because like I said, you have an environment here where the market might sit and drift. And very often what you'll see when you have something like a holiday like this is you'll drift into it, and then a day or two before, people will just stop. They'll just sell everything, and it'll just get a little drop into the holiday. So you'll drift higher, and then a day or two before, it just kind of peters out. And that might be what people also could be thinking about. But a name like Apple here, you can see stocks around 215. So a person could be kind of looking out at the puts Let me actually, where'd the price go on this?
And David, I just want to say that that is
Hmm.
a fantastic feature, by the way, that there is a $0 options contract fee. And for all of the viewers, by the way, while we were going through that aspect, analyzing the current charts and specifically looking at the mega caps like Apple, David did just demonstrate a trading feature in the paper trading account and also with if you have a connected TradeStation account that makes it possible to sort of practice these simulated trades. And especially from the standpoint of utilizing the options possibilities, this is really a whole new way to trade and to research on TradingView with your TradeStation account. So I think this is a very cool demonstration. And if you're interested in options, if you're interested in what you can do with TradingView and TradeStation, now is definitely the time to sit back and surely, get ready to learn something new. So with that being said, David, I'll pass it back to you, and I'll show you actually. I think I know exactly what you're looking for. I
To
think
get the chain to come back up.
yes. So for the chain, bottom right, bottom right of the panel, and you'll see it sort of risk graph and options. Move your mouse more. It's underneath the economic calendar, 2 icons down from the economic calendar. Or you
Oh,
had
there we go.
yep,
There we go.
exactly. You nail it. Then click chain. Make sure you already
There
have
we go.
Apple selected. We're off to the races. So, by the way, if you're watching, key feature you just learned about. You can visualize the options change like this with price. And David, I want to show you one more cool feature. Open that
Oh,
back up.
this one. Yep.
Yep.
Sorry.
So you just click the X. Oh, that's the yield curve feature. Let's see here.
It's this one. This is options.
There it is. Okay. Click the button next to the X at the top right.
Mm-hmm.
Yes, wonderful. So that feature is really cool because now it makes it so that your chart and your TradeStation data there is perfectly sort of, split down the middle with your options tools on the right. Really nice visual there.
Excellent. So right now, for example, because I actually have this hypothetical position in let's go to Apple again. So you can see here I bought it, for 20, basically for 204, and the stock's up around right now, up around 210. Say for example, I think it's gonna peter out here. So for example, one thing I could look to do is I could look to next week's options, and I could do something like sell the calls. So I could sell something like the 205 calls, and if I was to go over here and click on the bid, it would then actually allow me. How do I actually bring up the order ticket from this stuff?
So that is the one aspect about this. So it's great for the data visual in this example, but for the order ticket from this specific chain, it's not. I don't think it's going to fully accomplish what we want because it's more so for building strategies and and visualizing the data and analyzing the options contract that that maybe that's caught your attention. So it's a little tricky in the sense that you can use that options chain to build out the you can build out the data for the options trade you want to make, but then you have to take that exactly like you're doing now back to that search box to get the trade rocking and rolling just like that. So, it's sort of two steps when it should be one, but I'm sure the team will watch this, and especially with this integration between TradeStation and TradingView, we could probably add some feature improvements to make this more fluid. Because by the way, this is somewhat still brand new, as you know. We only launched this options product with TradeStation. I want to feel like a matter of months ago. And by the way, if you watch this show, David and I did a full walkthrough on this when it was launched, I think 3 or 4 episodes back. So I'll pass it back off to you, David.
Well, I wanted to just say that right now, you look at something like Apple, it's in a position where it's stalling, and a person could think about selling something like calls underneath it. In this sort of position I have, I can actually look to do that by bringing up the option itself and clicking on the buy and sell up here to actually do that. And then the other potential, for example, would be to look for Apple itself to peak here. And when you get some confirmation of that, when, like, say for example, we have a day when the overall market is more bearish, and we, like for example, if the 8-day exponential comes up and it sits and it kind of just stalls at it and it starts to drop down, that would be a spot here where people might want to be looking out. Say we're up around like 210, looking for something like the 205 puts, but waiting for that sort of break to occur. And I want to just kind of point out that right now Apple is at a spot where it is potentially kind of stalling, and it's kind of standing out to me because it really highlights one of the key points I wanted to make, which was that it does seem like a lot of the established mega caps are stalling, but new names are emerging. And one of those, is, we've talked about something like Netflix. And I mean, right now at this point, Netflix is broken out and run, but there are other sort of names like this. And I think people need to be kind of thinking down in market cap and looking for those sort of companies that are showing signs of that kind of emerging outperformance. And like the ones that really stood out to me, like I said, with things like Uber, were kind of really standing out, and then some of these smaller ones. There are some, interestingly, I have to say, I've been looking at energy overall recently, and we had done a TradingView idea on it. But first, I wanted to just mention there's two energy stocks in particular that are on the verge of some interesting breakouts. One is EXE, Expand Energy, and the other one is EQT. Now, these are both natural gas names, and these have been basically kind of nearing these highs. And I want to kind of point out that these are two names right here that have basically consolidated and could be setting up also to kind of extend and run to new highs. So that was kind of the first on my list of just energy names that I want to identify. The other thing, go ahead.
David, what was the name? What was the other name you said? EQT and
EXE.
Gotcha. Very interesting.
So these are right now kind of squeezing up to new highs, and it's just been interesting to kind of see, whenever you see something like this, when the overall market crashes, and then there's other names that are not making. I mean, if you look, it didn't even reach its lows from December. The overall market went back to levels from 12 months before that, or 11 or 9. It went all the way back to early last year's lows. And then basically this one has held. So one of the things we're seeing about all these stocks is they didn't pull back as much. So very often what will happen, the market goes through these cycles of being really volatile, and the whole index comes ripping back, and that's what we've done. But now as the VIX comes down, these names that have just been tight and not doing much, these are the names that maybe can extend into Memorial Day. These are the names that, here we are, closing at a new all-time high today, in something like EXE, EQT. I think it's all-time. Let me actually look back. There might be, some of these might have greater history if you look way back, but we're looking multi-year, going back to like 2014. So these are some names that are kind of standing out to me as things that might just kind of inch higher, and they can get that sort of breakout and run as Apple just sits and does nothing, and as Tesla maybe kind of stalls. And from my perspective, and in terms of what we're going to see for the next few weeks, these might be the sort of names that give us some performance.
So, David, I have to say, because I was looking at notes from our prior shows, I always think that's something I'm trying to make, happen more often on our shows, because I think it's interesting. We talk about some great topics, and especially all the research that you're publishing to your TradeStation account on TradingView, and then these chats. And one I just had written down that was so interesting was we were talking about on our last show, the weighting in the S&P 500 being very low toward energy. And now, like, these energy names are popping up. And I just am thinking, wow, that is interesting. Last month, we spoke about that. Now we've got these moves happening. And one more thing I'd add to that, too, is, I saw Coinbase was added to the S&P 500 recently, which actually surprised me, because I was thinking, now that we're going down that road, I was thinking about our conversation as well, where I'm like, it's interesting. I feel like the S&P 500 could use a little more energy. Like, they're kind of overweight tech, digital. And so I'm going to be keeping my eyes on some of those energy names. And also for the viewers, David's got exactly. Okay, so that's such a cool chart that you have open. You walk us through this. Follow the TradeStation account on TradingView. You'll get these research ideas every day.
Well, thanks, Jay. So basically, this is XLE. And What's interesting is this is the only one of, so there's like 11 spider funds that track the major sectors like financial technology, all that stuff, healthcare. This is the only one that has not made a new high this decade.
Wow.
So it's below where it was in 2014. It also is the only one that trades at an average PE of single digits. So that's also interesting. So I want to just kind of point this out here because if you look, you can see we've held this long-term sort of low. And from a valuation perspective, people might look for this to melt back up, or potentially even go to new highs. And there are some other things right now. I have to be honest, there's been some things popping up in energy in the last 2 days that I find confusing. The situation in the Middle East, it's been really good for tech stocks because we have Trump over there kind of having Nvidia sell chips to, Nvidia, AMD, selling chips to the Saudis and things like that. Supermicro had some business from it. And those things are positive for tech. But there also seems to be something else here where it's not just a business thing, it's something of a geopolitical thing. And I've also seen headlines about, there's this ongoing conversation with Iran and this attempt to kind of somehow normalize relations with Iran. And that could entail potentially less sanctions on Iran. It could entail more oil coming into the market. So to me, it's difficult here to, when I first wrote this, I was looking purely at the technicals, and there were some interesting arguments to it. But at the same time, I think it's a little bit less clear right now. Nonetheless, I think purely from a charting perspective, it's interesting to kind of see the way levels like this held. And if, again, Memorial Day, if we're in a kind of positive environment, this one has space to the upside. People might see XLE. They might say, you know what, this can melt its way back up toward 92, up to this gap maybe. It has potential space to the upside. And so I think that's really the way to think about it. It's interesting also to look at how it went down just today and basically held that low from early March. It hit that 8-day and bounced right at the 8-day exponential moving average. Now we have some stuff on TradeStation, just so you know, that it has a little thing that lights up when it touches the 8-day that I often share with my customers and other webinars I do. But this is something that, from my view here, this has some potential space to the upside, but at the same time, there is some potential risk right now of the geopolitical environment being, good for the country, good for the world, good for humanity. If we have, less tensions and less risk of war. However, it might turn into something which is not terrific for energy. It's a risk that's kind of out there, but I did think it was interesting to look at this long-term sort of range we have between 75 and 100 on this thing, and to realize that it still has about 15 points kind of to get up that range. So this is, I think, something else that is kind of interesting.
That's very interesting, and it just ties into looking for also some opportunities that are out there in the market, especially after the amount of volatility that just occurred because of the tariffs. And that's interesting. You bring up the Middle East trip and the Nvidia trip sales. It's good for tech. And with the sort of summertime coming up as well, are you thinking at all about sort of getting back into the swing, say after summer? We're already now then back to school, then it's holidays. Do you ever think that far ahead for a lot of our viewers who are interested in, say they missed the this tariff tantrum? We got those lows, we got the panic sells. Now there's just this quick rise back. What's sort of your thinking about patience at this moment? Because obviously no one wants to just rush in without doing research or anything of that sort. So maybe talk to us about some longer term plays that people could think about, add to their watch list. I think the energy name here, an energy chart, is just right in that wheelhouse. But anything else you're thinking about, even longer term, so people can take the summer off?
My point about energy is I'm not really sure that it's going to do much more than just go up into the range that we just showed. So to me, that's the kind of issue with it. But I think long term, we do have to look at the horse that got us here, or the kind of real driver, and it does continue to be technology. And I think we have to realize things like the semiconductors and stuff. If you look at the stocks on a weekly chart here, I'm going to take away some of these moving averages and stuff. But from my perspective here, this is something where, this pullback looks a little bit like this. back, kind of during something like COVID. Remember, we had the whole DeepSeek thing before tariffs, and DeepSeek was going to be the end of American chip stocks, but it's not. Microsoft and Meta both came out and essentially, confirmed that there's going to be a lot of AI capex. And I think that the situation in the Middle East actually reaffirms something that people have talked about, but I mean, it's only been a rudimentary conversation, which is that sovereigns, countries, are going to be a market for chips and for AI build out. And you're going to have countries, that want to be doing AI. And the other thing is, if you're someone like the Saudis who have a bunch of money and not a lot of other economic activity, this is an industry that would make sense for them, and they are known to throw money at stuff. So if you're going to have a situation of all these kind of countries, building out AI over time, it creates the potential for a completely new layer, a new level of growth. And I think if you look back at the internet in like 95, 96, you had the first surge of activity, but that was not the end of it. So we could very well be at this spot here where in the future, Steph, in a year, we could be doing this webinar and we could be having a virtual person talking to us, doing the chart, answering questions. I mean, that would require AI. And the thing is, you and I can do it, and about 50 million other people who do webinars and do Zoom meetings and do whatever. The ability of AI to expand into new areas, whether it's government doing stuff or whatever it is, we're in the early days of this still. So I think when you look at it, the chips have had this nice bounce, but I think you look at it in the long run, how did it perform when it came back from something like this back in 2020? Well, you had a sharp comeback, and then you basically had a period of tightness, and you can basically see what happened. Was it then consolidated at the old highs, and then it had a new run. So if you were to project forward a similar kind of amount of time, I think we could kind of see that this could fit for what you're talking about here. This was essentially a period of about 14 to 15 weeks. Now let's go over here and let's look from our low of where we are right here. That would basically put us, essentially, you could see potentially these ranges on the stocks. It may go back to kind of the levels where it was last October, the period right around the election, sit and consolidate for a period, and then start to go on a new run. And the initial rebound will be very sharp. Then there'll be a period of relative tightness, and then continuation. So Nvidia reports earnings the week after Memorial Day. And so from my view here, that is the kind of near-term catalyst. But I think it's not in any way difficult to look out. I mean, this is all very extended, and people might. And I would say that when you have an extension like this with the earnings and everything else, in many ways, the Saudi Arabia news might have taken away some of the move we were going to get, from earnings. So from my perspective here, we have a level of like around 140 where we might kind of, sit. But my view here is that we're setting up potentially for the whole next leg of AI and of semiconductors and of data centers. The whole next wave. I mean, don't forget, data centers started with things like cloud computing and all that sort of stuff. And that was, very much a thing of the last 10 years. And AI is a new application in many ways. So I think we look at this here. You want to know things that will kind of, be operational or trades that will be in effect in Q3. To me, the semiconductors are looking like a good candidate for that. And so what I'm talking about is a period of rebound, a period of consolidation, and then a period of potential breakout. So like, for example, you might want to look for things like the 50-day, so what I would say is, let's look at the moving averages on this. The 50 days under the 100-day and the 100 days under the 200-day. So if you look back, now I'm back on the daily chart now, which is why it's saying different numbers, which I love about TradingView, the way it does that. You can see here that in many ways, it kind of the 50-day had to start rising, and we kind of had to have the moving averages move back into some kind of alignment before the extension happened. The 50 got back over the 100 and the 200, and it doesn't have to be exact, but the key thing is that you can see here the long term had to get bullish again. So the first rebound was violent, then a period of consolidation as the moving averages realign, and then extension. So we look over here, and you see the exact, kind of similar, where a period of sideways movement as the 50-day comes up and as they line up again, and that would bring us, into essentially late summer, kind of period running into that kind of period toward Labor Day. And I think that's maybe the way that, if you want that longer term playbook.
That exactly answered the question I was going for, especially because, right, some of this quick snapback has happened in such a short period of time. I think it's good to look out a little bit into the future at what could be possible several months from now. But in showing us the moving averages, I also want to get back to options as well at some point, because of that, that capability now. I think it's very cool, and there's lots of people who want to learn more about options as well. But I want to ask you about moving averages and how you're thinking through moving averages in these types of markets because of the way you did that demonstration. Maybe you could just give our viewers, especially those who are new, a quick background on how they can think about moving averages in a market like this. If you're looking for crossovers, or if there's one moving average you prefer to watch than another, it's always insightful, and there's endless people trying to learn markets, especially indicators.
Well, I just use them as basically trend indicators. So right now, this bounce was an oversold bounce, but now we have a bearish long-term sort of configuration of the moving averages. And so from my view, this needs to convert itself into something that is more neutral. And so that means if you see this, the faster under the slower. So for me, the long term is really the 50, the 100, the 200. And for me, the 50 can be intermediate or long term. When it's paired up with these, it's more of a long term. But if the one, I'll say, in my opinion, the single most useful one is the 100-day moving average. If it's falling, then it basically means you're in a long term kind of downtrend. It doesn't mean that it's necessarily like going to be moving lower, but it means that your longer term momentum and trend is lower, which means that it needs to kind of flatten out before. Now, it's interesting, if you look here, the 100-day moving average, it looks like it's just now starting to turn higher on NVIDIA. So that's kind of interesting. So from my view here, this is, you can see that once it kind of broke and went lower, it kind of had the follow through. Now this whole bearish thing that happened back here in February has happened. So now you would be looking for something else of essential neutrality. So on the shorter term, the 8 and the 21-day exponential are what I use. And so in something like that environment, this is now a short-term bullish. However, it's very much extended. So from my view here, this is something that you could see that crossover. The signal in this one and the opportunity was here because you had the crossover and then you had a pullback. Now we're very extended to the upside. And so from my view, this might be one here where it has that period of, the short term doesn't remain in effect, forever. And so it had the short term signal. I mean, that was like 2 to 3 weeks ago. And now it could have a period when we need to see that kind of intermediate and longer term trend move more positively. And so from my view, that is the way to think about it. Now, there is always the risk, though, that they have some kind of amazing earnings report and it gaps to new highs. But that is really an event, and it's not really something you can do with in terms of technical analysis. And I think when you look at things like the tariffs and the other things happening, and who knows exactly right now what the news events that are coming, what kind of surprises we might get. But in terms of simply moving averages, what I often do is I think about things from the long term and then the kind of short term. And you can run against a long term bearish thing if you're coming off an oversold condition. But now we've done that. So now we're in a spot where the momentum, in my view, would give more of a sort of a sign of pausing. I do want to mention, though, that to me, if any opportunity now of an index is appearing, it's actually the Russell. And the reason I say that is because if the 10-year yield moves lower, like I said, when you look at things, it might be the case. The Russell now is actually in a spot when it's basically back to where it was on Monday, and it's kind of holding here, and it's closer to something like the 8-day exponential and everything else. So the issue, in my view, is when we go toward this kind of drift of the holidays, it might be difficult for things like the chips and the Nvidia and things like that to just keep extending so high above their 8-day exponential. So looking for things that are closer, like for example, energy here, which, this is the reason why it was interesting to me, is that here it is hitting that 8-day. You can see a much bigger bounce and a much bigger candle today on this than you had in something like semiconductors, which are basically way above. So you see that they are short-term overbought. Something like energy was short-term, right in the sweet spot. And that's the reason why it had this nice bounce. And I think to a certain extent, something like the Russell is in a similar spot. So from my perspective here, if people are looking for the index that's going to give some performance in the next, 3 to 5 days, it very well could be the Russell. It could be something like energy. So that's kind of my view on that.
And that's why we also run this show as well, to keep people up to date, not on what has already happened or sort of the biggest moves that are already at their highs, but to also point out where there could be new sort of trading potential or areas where the market hasn't totally priced in this what could happen, or factor in the in this case small caps or energy. And that's what we're trying to show. We're trying to show some of these hidden insights that don't necessarily make it to the mainstream media or make it to the mainstream news. So between that energy example and the energy charts that we looked at, then that small cap tutorial, I think that's very nice, especially for thinking about, beyond the summer, because this, like we started the show, this could get a little boring here. We might go sideways. So take your time, think about what your next play could be. And I do want to make sure we just end up on options one final time, because we did briefly touch up on that. And I thought it's also a great announcement that you all have brought to the table. And maybe just as a way to sort of wrap up the show as we near that hour marker, you could remind the users about, how to think about options in terms of approaching markets, like just the level of different ways you can trade, whether you're expressing a long or short position or even hedging. And if you want to just demonstrate that with that TradeStation account as well, please feel free to.
Yeah, well, what I would say is that when you want things that are directional, sometimes something like coming off the 8-day exponential moving average, when you have a clear trend. Now, I just want to mention EXAS. I did a TradingView idea, and this is another kind of example of one of these sort of individual names that had a catalyst, that had some signals we might want to look at. But I'm actually going to end with IBM. This is one I had meant to talk about, and this is one for me here that is hitting a new all-time high today. Now, it's interesting. You can see how it went down and touched that 8-day and extended. And now, from my view, people might be looking here for this to actually, go to a new high. Maybe in a few days it pauses and it tags that 8-day exponential or something like that. And in that environment, that is when people might want to step in and think about using calls and being long, calls on something like that. So that is really, to me, what would kind of stand out. And the way to do something like that, again, would be to go to IBM, and remember, click over here where it says options. It'll actually bring up the chain, and a person might look, for example, if you're interested in something like the 270s or something, a person would click on that. It will then actually chart the options. It's interesting just to look today at how this call basically since 2 days ago is from like $2 to like $6. Now remember, if a person had simply, I'm going to go over this so we can do two charts here, but if a person had simply used that 8-day exponential moving average, and they had seen on Monday and Tuesday, buying it, looking to be long using calls when you were under the exponential moving average. So for me, I'm looking for stuff that hits new highs, and then a certain period of time later is under or touching that exponential moving average. So this kind of stands out to me. When a person would look at something like this, this is now the actual chart of the option, and if you click on something like buy, it will then bring up the order ticket over here, and that's kind of the way to navigate it. And then if you want to kind of surf the overall chain as well, if you were to click on this, and you can change your symbol here, and then this would go to chain, and it allow you to kind of just bring up the entire options chain. And what I would often say is that people should be looking at things like, if from my view, for people who are doing just pure directional sort of trading, looking for a delta around 35 to 40, and to think about entering an option, if you're looking for something directional, to buy it when the delta is around 30 to 40 and selling it when it's around 60. It will kind of give you the clearest sort of move as a way to just kind of play the swing. And so we can talk about that more in the future. But to me, it's really great to be looking at things like delta to really see what can kind of give you more leverage, because you have this thing also called gamma, and you'll notice that the gamma on some of these is the delta is much lower, but the gamma is similar. And what that means is if the stock moves up $1, it means that the delta on this one will gain 20 deltas and this one will gain 20 deltas, but at the same time the cost of them is much lower to be buying the one with the lower delta. So the thing is that when an option costs more, the bid-ask spread gets wider. There's actually rules in the exchange. I don't know exactly what they are, but you'll notice that the more expensive options have a wider bid-ask spread. Here, the bid-ask spread is like more than $1. You go down here, the cheaper the option is, the tighter the bid-ask spread. So it's really not a great thing to be trading options that cost $10 or something. Ideally, looking for the options that cost a few dollars or less will have tighter pricing, and they'll also have more leverage. So that's one of the things I always kind of look for. And one of the ways you can see that is to be going into things that have that lower amount of delta between 30 and 40, that if it moves in your direction, what will happen is the delta will increase, the premium could increase, and then it basically gives you that best way to actually capture the move. But I think it's really important, because going too far in the money, some people like to talk about it, they say it's safe and things like that, but there is a cost. Nothing is free. And if you think that buying options with a lot of that are deep in the money are going to save you money, just realize the bid and the ask are going to crush you, and you're not going to get the gamma, which means you're not going to get the leverage kicking in your favor. If the stock moves $1, it doesn't really gain very much delta. You don't get as much leverage. So these are the things that when something like, for example, if a person had been focusing on IBM coming off that 8-day, that is where focusing on the option around 30 to 40 delta can kind of really deliver the actual leverage.
Well, I have to say that is the quick and tutorial and explanation we needed, and I like how you combine the moving averages into that as well, to just from the start to how to spot the potential setup from the get-go. And also, I think one final thing I'd add is, you can, as David did show in the prior demonstration too, you can paper trade this, which is so you can take everything David just said and then paper trade that, see how you performed, right? Paper trading is simulated money. Think of it like a video game. You're not risking real money. It's a video game. It's paper trading. And you can walk through what the tutorial David just gave us. And I just have to say, I think it's just it's a new layer that you can add on to your analysis on TradingView with TradeStation. And I think it makes this show here a little more dynamic, in that it's not all just sort of trades in terms of buying and selling the equity itself. You now have access to this options feature and data, which is just great. So with that being said, the market is about to close. We've had quite the run, and we like to end this show with any last bit of sort of insights or analysis from David. And as always, be sure you follow the TradeStation account on TradingView. David, maybe just end the show here with some final insights you wanted to give for everyone, and we'll see you all next month.
Yep, I just want to put people back to remember this potential range here, and just realize that we have that potential for a kind of benign, low volatility drift into the holiday weekend.
And with that, ladies and gentlemen, thank you for tuning in to another live show with TradingView and TradeStation. We will see you next month. And also be sure to check out our YouTube channel where it's live, also on TradingView where it's live, and we will see everyone soon.
Thanks, Steph. See you next month.